Good morning, everyone, and welcome to the European crossover webinar. And we did see the euro going and pair back a little bit yesterday. We're a little bit firmer this morning, and we've seen the indices rally back, and they're kind of pairing back right now at the moment here in European trading. We'll move into that. You can see here we were able to finally get above this level here that I considered a pivot here, and has allowed the market to move higher. Kind of pulling back just a little bit from where we were. This is more of a target up in here if we were to get up there, but market was able to come back from this pullback. It's on the 2-hour chart. If we go and take a look here on the daily, I'm glad we're here at the end of the week. We did get a little bit of a hammer from yesterday's action. It was key. I shared that we defend this 12,659 on a daily close. If we had broken below that, then we could really come off today. But we were able to come back, so the market's open to potentially moving higher. We have gone and paired back a little bit as we start the morning session from this level here. We can take a look and see where Bitcoin is at. So it looks like Bitcoin made it to about 50,500. Potentially, we're looking to drop down here just a hair below 49. We'll see how we're doing. Obviously, it's responded to the ability for risk to go on and fare better as we did yesterday. It looked like could have a little bit of trouble yesterday, but we were able to go on and come back in the indices. And I just go on and put crude oil on here just to get an idea of where the action is. We'd seen that rally up in here and a pretty good sharp pullback. And then, of course, with the whole business with the Suez Canal, it kind of pushed the price up sharply. And then we came off and just a bit of a recovery from there. And then if we take a look at where we stand with the 10-year note, but we've gone in same thing, just relatively quiet. Although we pulled back and we're looking, I generally don't use 4-hour charts, but when it comes to interest rates, I do to get a better bearing because those have a tendency to move a little bit slowly. But you can see here we looks like kind of a bit of a break to the upside, almost like a fake, and then turn around. And so we do have interest rates moving a bit higher this morning. See whether or not that has an impact. And then the S&P saw a pretty good sharp pullback in itself. And we're still holding up very, very well. Look at that. And we'll take a look at where we stand on the news story. Aussie New Zealand dollars down sharply for the week, and bonds notch a big rally. The Aussie New Zealand dollars were ending the week deep underwater on Friday as the market gave up on their chance of early rate hikes and pulled bond yields sharply lower. The Aussie was pinned at 75.90. Next major resistance was uncomfortably at 75.64, and a break would open at a retracement target of 74.99. The Kiwi at 69.65, having shed 2.8%. The slump swept away from the support to 71 and 70.05, as well as a 100-day moving average, 71.18. The Kiwi has been floundering since New Zealand decided to cool a red-hot housing market by ending tax breaks for property investors, a shift that forced speculators to sharply scale back wagers on any early rate hikes. A huge rally in bonds saw yields on the 2-year paper down 9 basis points. Australian bonds with 10-year yields were down 13 basis points, and a break of the 1.65 area could allow for the rally to 1.42. Bill Evans, economist at Westpac, said the RBA was likely to extend its bond buying program by a further 100 billion Aussie dollars from October, in part to tamper any renewed strength in the Aussie. Were the RBA to taper, it will expose the odd and signal to the market it has begun tightening. And sterling revival faces Highland headwinds. See here, the Scottish secession from the United Kingdom has for many investors always been the second biggest risk for Britain from Brexit. The next few months may test that thesis. After more than 4 years of wrangling with Brussels before Brexit was sealed in January and 12 months of pandemic, some gauges of UK economic activity certainly fell last month to their lowest since before 2016. And after 2 years of avoiding British stocks and bonds and global portfolios, investors' appetite to viewing the reality rather than the uncertainties of Brexit amid hopes for a vaccine fueled rebound from COVID-19. That's driven domestically facing UK stocks back to early 2020 highs, and speculators are long of pounds again at a level not seen for many years, or for 3 years. If the government Scottish National Party is to return with a hefty majority as expected, it is pledged to seek another vote on secession to match the one that has lost nearly 55 to 45% in September 2014. Needs the assent of the UK Parliament and Westminster to do so, and ruling Conservatives they're opposed to another vote, but the Edinburgh Parliament could refer the issue to the UK Supreme Court. So I guess the potential for a worry from that. And the dollar enjoys a proven economic outlook, and doubts surround the euro. The dollar traded near multi-month highs against the most major currencies on Friday, supported by a wave of optimism over the improving U.S. economic data and rollout of the coronavirus and rising treasury yields. Now, just yesterday, they were just saying, oh, well, there's concerns that blah, blah, blah. So, like I said, whatever the news of the day is, they come up with. The euro rebounded slightly ahead of data on the German business sentiment due later in the day, but the outlook for the common European currency has soured because of renewed coronavirus lockdowns and the slow pace of vaccinations across the European Union. The greenback has more room to rise against the euro, but its gains against the other currencies in the past few weeks has been so rapid that some analysts are warning against chasing the dollar higher from current levels. The euro has broken through the 200-day moving average, and that's a clear sign that it will continue to go lower, said Minoru Uchida. The one notable exception to the dollar's gains was the British pound, which edged up to 37.62 after rising 4 tenths on Thursday. Data due out on Friday that is forecast to show a rebound in British retail sales could give the pound a further boost. Jobless claims fell to a one-year low last week, and Joe Biden said he will double his vaccination rollout after reaching his previous goal of 100 million doses, 42 days ahead of schedule. During the European trading, Germany's IFO survey is expected to show improvement in business morale, but this is unlikely to halt the euro slide because worries about the European Union's slow vaccination rollout and bickering with former member Britain over the vaccine exports have become a dominant theme, the trader said. So with that, we'll just go and move into the analysis. And you can see it's just been three straight solid down days for the euro here. And let's see what we're looking at for today. So the euro continued its slide, hitting the weekly level of 1770. Support for Friday would be 1752 with resistance at 1813. And on to cable. Cable found support at 3670 on Thursday before bouncing above 3700. Resistance for Friday will be 3796 with support at 37. And onto the Aussie dollar. So the Aussie found support on Thursday at 75.61, a few pips above bias chart support. Support on Friday will be 75.56 with resistance at 76.15. And we're just above that 76.15. We actually knocked on the door at 76.23. So and on to the Kiwi. The Kiwi dropped to 69.38 and remained weak. Resistance for Friday will be 69.98 with support at 69.23. We're holding up a little bit better across the board on these currencies. Onto the dollar CAD. The dollar CAD got above the bias chart resistance by 12 pips to 26.29. Resistance for Friday will be 26.20 with support at 25.48. And on to the dollar peso. The dollar peso gave back gains on Thursday. Resistance for Friday will be 20.79 with support at 20.54. And on to the dollar yen. They finally broke out, and it looks like we'll be heading to this weekly level. We've been talking about 957. The dollar yen finally pushed higher. Resistance on Friday will be the weekly level of 957 with support at 885. And on to the cash dollar index. So the dollar index got to a few ticks above the bias chart resistance on Thursday. Resistance on Friday will now be 92.99 with support at 92.48. And they'll take care of the majors. And let's go move into the cross rates. Well, we finally kind of steadied ourselves just a little bit here in the Kiwi yen. And yesterday we had support at 75.62. Gonna go and keep that. And we had 76.42, and we'll keep that. We're actually trying to move a little bit higher. But we'll still keep it. Let me see, 75, let's see, 65, 62, pretty close. The only difference is if you were to just go with the close. I guess for right now we can just go with yesterday's close here for support, which would be 75.82. And on to the euro pound. This is kind of sliding right back down the hill. We'll go with the close here for support, which would be 85, 85.50. And support right there, 86.03. Although it doesn't even look like we're close. Look how tight we're not even trading here. So let's just go with, see this close here? That gets you a few touches here. Pull this up so you can see that a little bit closer. Right there. 85, 82. That might be just a little bit close, but this market's trading super, super quiet, and the euro's already weak, so we'll stay with that 85, 82. We'll go with that. And on to the euro odd. Well, we're giving back these gains as the euro just looks to be under some trouble. So we're going to go with the most touches right here, and that is 54.24. And for resistance, go with this wick right here, which is just above that 54.87. That might even be a bit ambitious. We just go with this open right here on this day. Should be 55.17, and we may not even get a sniff of a 55, but that'll be it. Onto the euro Kiwi. Obviously, like I said, with the euro weakening, potential to go in and pull back here. Well, we're right there already. I guess right there, which is going to be 68.59. Oh, that's where we're here at 68.57, so that's fine. The only difference is we will lower the potential move higher. Same, we'll go with the close there, which is 69.18. And onto the ASEAN. A little bit of a turnaround here. Finally started to wake up a little bit. And yesterday we had 83.12 as our high. We did get up as high as 83.02. We can see we're pushing above that today. Let's go with this body close right there. Right there. Which can be 83.41. And for support right there, that wick, 83.72, 82.72. Onto the guppy. Some strength here from the sterling. We are pressing just on this 50-50. Not sure how much further we can go. Maybe we'll go with this wick here, the downside, which is 50.75. And support, we'll just go with yesterday's close, 49.91. And to sterling odd, a little bit of push yesterday. Support, we'll just go with this level, 80.36, which looks like they did tip back to touch that. And on the upside, we're a bit contained today. Don't really see anything. I will go with the 81.61, but I don't think they're gonna go anywhere close to it. We'll just go with just yesterday's high for today, 81.46. And that'll be it. So there's the bias chart. And we're going to take a look at what gold is at. Pretty much just not doing a whole lot of anything. Just kind of remain to be stuck in the mud. And we did mention crude oil earlier. Same thing here. It looks like a down, up, a down, and up. But we're trading a little bit tighter range. But we've had some pretty good volatility this week. But still remains a really tough market to trade overall, I would think. And other than that, that appears to be it. And finally, we're here at the end of the week on Friday, so I'll just go and get the bias chart posted. And thanks for joining us here in the European crossover webinar.